Rick Rule is a guy that has made famous a statement saying that from Joe and Jane six-pack to the Harvard Endowment Fund, funny fact, the Harvard Endowment Fund just bought a couple $100 million of metal, but he would say the allocation of gold and silver, physical and equities amongst the entire matrix from Joe and Jane to the Harvard Endowment Fund is less than 0.5%. And forever, I would agree. The people that we've been talking to represent the pimple on the elephant's rear end, and all of a sudden that pimple has grown into a much larger boil, to the point that people are beginning to wake up, but it doesn't take much recognition to create these kinds of lines. And you know, the point is that people are beginning to wake up.
Hey friends, welcome back. Thanks so much for being here. That, of course, was Andy Schectman. What we're witnessing is a battle against the paper bankers versus the Chinese who want the physical silver. I'm calling this one Sun Tzu's silver. And anybody calling the top in silver at 80 bucks, well, I think you're in for a rude awakening. And Andy Schectman is here with the receipts. Friends, before we start this one, just a quick word about a valued sponsor. You guys have probably seen the headlines about Ozempic. Major analysis found that people who stop taking these weight loss injections gain nearly all their weight back within a year, and that's if they don't have other health complications. This is why I like BioTrust's GLP-1 Elevate. It'll help your body naturally trigger the same hunger-controlling, craving-reducing signals that Ozempic claims to, but without needles, prescriptions, or scary side effects. It also promotes the feeling of fullness, helping reduce hunger hormones. It supports fat loss instead of muscle loss and helps maintain healthy blood sugar levels. For a limited time, you can grab BioTrust GLP-1 Elevate for 40% off only at trimwithsgt.com. Plus, you'll also receive a 60-day satisfaction guarantee and free express shipping on subscriptions. Once again, go to trimwithsgt.com to get this deal right now. The link is below. Hey friends, welcome back. Thanks so much for being here. Sean from SGT Report with his January 8th silver, gold, platinum, palladium, real money update. Guys, I'm delighted to have back to the show somebody who has become just about as famous as Asian Guy. And we'll find out where you can actually find his videos, because I continue to see this man reposted on all sorts of different YouTube channels. Whenever I type in silver, I get a lot of Andy Schectman and Asian Guy. And the Andy Schectman clips aren't always from his own channel. Andy, welcome back. How are you, sir?
I'm Sean. It's good to be here, brother. Happy, healthy New Year. Thanks for having me, and I've been looking forward to catching up with you. I'm great, thanks. Hope you are too.
Yeah, thanks, man. Good to see you. Happy New Year. Here's milesfranklin.com, a company I've trusted for literally 20 years. I've known Andy for, what, 15 years, Andy? Something like that.
Yeah, maybe longer, but yeah, at least that long.
Yeah, and the first 100 ounces of physical silver I ever bought were 10-ounce bars from Miles Franklin. SD Bullion is a place where I just locked in a monster box at about 75 bucks an ounce. And just so people understand, my precious metal is held on deposit with SD Bullion at an undisclosed armed location somewhere in the Midwest. But here is the punchline to that story, and we'll read a clip from David Jensen's latest Substack in a second, Andy. I had David on about, I don't know, 3, 4, 5 months ago, and I noted on that call to David, I said, David, I should sell some Bitcoin. At that point, it was 2,200 ounces of silver for one Bitcoin. I waited too long, but I am still converting some of that digital money to physical. Did I make a stupid choice? Are we in a bubble? Are we at the top?
No, not even close. I think not even remotely close to a top, although I think January will be a very volatile month with the rebalancing of the Bloomberg Commodity Index, with the January effect, with the increase in margins that will have effect on some, but not on the big money that's standing for delivery. I don't think you made a mistake at all, and I don't think we're in a bubble at all, but to expect it to continue to move at a 45-degree angle up without some form of volatility or exhaling, I think is also irrational, I guess we could say.
Yeah. Andy, what I've been saying, though, to Bixweir and others is that plebs like me, the common man, We should not be able to have hoarded a king's ransom in silver over the years, making it even hard to move from one state to another. We were only able to do so because we knew the price was so manipulated that it was the bargain of a century. I still think at 75, case in point, I bought a monster box. I think it's very, very undervalued, even compared to the 1980 all-time high of 50. Do you want to talk a little bit about that?
Yeah, you got Bank of America saying it go as high as $309 an ounce. You got the chief investment officer of Morgan Stanley, who came out a month or two ago and said, you know, the 60/40 platform that Wall Street has used for the last 50 years is now flawed. You should sell half of your bonds, that being the 40%, and put 20% of it into gold. Michael Hartnett, the chief or the chief analyst for Bank of America, the company that just said $309 silver possible, said no, it should be 25% of your assets that are in precious metals. And the craziest one of all might be Jeffrey Gundlach, the bond king, who made his life selling the antithesis of gold, an instrument that pays interest, said 25% is not over allocated at all. So no, I don't believe that you have at all. And look, I would say silver is an asset that has never been allowed to find true price discovery. You had 8 banks in the West that have suppressed the price of silver forever. And the question is why? Now, I believe it's the military-industrial complex that has held down silver because you need it to make high-tech weapons and to sell it through NATO and all around the world. That's the goal. Send weapons that blow up places like the Ukraine, and then BlackRock as the military-industrial complex, which is the co-custodian of SLV, the world's largest silver trust, comes in and gets the reconstruction contracts. It's much deeper than just it being a commodity. The question is, why would 8 Western banks hold the largest concentrated short position of any commodity ever traded in the 1,000+ commodities on COMEX? And I think you'll see very quickly that perhaps there's more to it than meets the eye. Of course, the government coming in, recognizing it as a critical mineral, the same thing the European Union did in 23, and now China also saying we're going to prioritize domestic consumption and massively limit exports. All of these things are coming together at the same time as the numbers from the vaults keep falling and falling and falling. And I hope we get a chance to talk about the number of deliveries into COMEX, because to me, that's really all you need to know, is that the most well-informed traders, forget about well-funded, that's obvious, but the most well-informed traders in North America, the Wall Street crowd, is standing for delivery at a level no one has ever seen in this country before. So no, you're not early. I think that it just gets harder as the numbers get bigger. But what is real price discovery? What should silver truly be? We don't know yet. I think we'll find out.
Yeah, and I keep hearing numbers. Mike Maloney, case in point, says to get back to the 1980 all-time high of 50 in today's dollars, we'd need to see about $215, $220 silver. But then he cites M2, the real money supply, and all the money creation, the hidden money creation, the stuff we don't know. I mean, the backdoor stuff, the bailouts for the banks, that kind of overnight repo stuff. He's saying it could be $500, $600, $700 an ounce to get back to the nominal 1980 all-time high. So that's why I feel secure buying that monster box, because I don't want fiat melting away. It's a melting ice cube.
You know, he's a good friend of mine, and I just had dinner with him a couple weeks ago. He said something very similar to that. He's a genius, a very smart man, and a very nice man. And look, it's not outlandish if you realize it's coming out of the ground right now in a depleted ratio of 7-to-1. For 5,000 years, we would see 16 ounces of silver for every 1 ounce of gold. That is depleting. Like your skin is epidermis, silver is found in nature in what's called epithermal, very near the surface. This will be the 6th year in a row of huge deficit between supply and demand of about 200 million ounces. But the scary thing, Sean, is that of the 800 million ounces that were mined last year, roughly only 180, 190 million came from companies that mine silver. The rest was a byproduct of companies mining zinc, lead, or copper and stumble across it. So it is an asset that is declining in nature as its uses are expanding in digital and AI and military and even monetary. So he's not far off, and if you realize it's coming out of the ground at 7-to-1, I mean, take where we are right now, divide it by 7, you're probably around $600. Now that may seem lofty, but you take the number where we are now and divide it by its 200-year average of about 45-to-1, which we'll call man's ratio, 7-to-1 being God's ratio. Again, the manipulation, the holding down, the suppression. However, the exchanges have valued gold and silver due to naked suppression has distorted its real value. But even at 42-to-1, you're right around $100. which interestingly enough, if you take the 45-year cup and handle, technical analysis would say you take the top of the cup in 1980, the bottom of the cup in the mid-90s at $4. The difference is $46. You get up to the top cup in the top of the cup in 2011, doesn't break through, comes down and makes the handle. And once it breaks through, you take the top of the cup minus the bottom of the cup and add it to the top. 50 minus 4, 46 on top of 50 is 96. Right at pretty much, when you divide out the 200-year, 150-year average of about 45-ish to 1, you're right there at 96, 97 bucks. So to expect silver to get to and exceed $100 is not insanity. In fact, that's, in my mind, base case. That's where we should start focusing, but to see it go much higher with no resistance in front of it and no suppression, naked suppression in the market moving like that, well, I guess we'll find what real price discovery is, something it unfortunately has never had the opportunity to do. But for all of the people who have listened to you, God bless you for doing it. They've listened and hopefully have been able to accumulate it. Like you said, we should have never been allowed to. Well, we were allowed to because prices were suppressed, and those that have had the foresight and the good fortune of finding you years ago, like I did, have probably all secured that ransom you're talking about, that fortune. And God bless people like yourself, and I'll even throw myself a little bit into that camp, who have stuck their neck out publicly to say these things because we want to do the right thing. Yeah, we want to build a good business like the folks at SD and like the folks at Miles Franklin and any of the major companies or people like yourself, but there's no law that says you can't do the right thing and run a good business at the same time, and try to wake people up to it. And it's about time Wall Street says we were wrong. We were wrong. We won't hear that. Instead, they'll just tweak their models and say, well, it's time to change the model. Not that we were wrong. And I'm not looking for a pat on the back, but you have changed people's lives, and in a big way, we both have, in a meaningful way. And it's nice to know that we've contributed just a little bit to our fellow man. And I'm not trying to be grandiose. It's a nice feeling to know that that our efforts have worked out for people who have listened to us.
Well, and let me just pay it forward too to say that you're an inspiration to so many people, that you're kind of a rock star now, like Asian guy. You're all over YouTube. And it's about time. I mean, I'll pay it forward to the people who really went under the barbed wire first on this thing. Mike Maloney, Andy Schectman, Bix Weir, Chris Marcus, Ted Butler, Adrian Douglas. Who am I forgetting? There's so many people. Some of them aren't alive anymore to see this day. And it kind of breaks my heart because they deserve to see this.
Yeah, Ted Butler. Ted Butler was the one that really was an inspiration to me, of course. And you got David Morgan. You got a lot of the guys.
David Morgan, that's right.
You got a lot of the guys who have paved the way, certainly. And it's sad that Ted died right before this all broke free, but he was my inspiration, at least in terms of really showing what was happening on the COMEX, and now that baton has been picked up by what's his name, his partner Ed Steer, who is now trying to pick up the baton that Ted left behind. But yeah, all of those names, Chris, and I still think that the interview that Chris Marcus did with Bart Chilton is maybe the most important interview I've ever watched in my life. And I think anybody who owns precious metals must go to Arcadia Economics, Chris Marcus, as you mentioned, and Google Bart Chilton, Chris Marcus podcast, where Bart Chilton, the head of the CFTC, admits many of the things that we have talked about for a very, very long time, talking about Bear Stearns going bankrupt largely because silver went from 9 to 21, saying this publicly, saying that Jamie Dimon was called into Hank Paulson's office with Ben Bernanke and said, we need you to take the short position, Jamie. And he says, well, look, I'll be in violation of position limits, but I'll do it. And they say, you have 90 days or whatever to get that cleaned up. And at the end of 90 days, Bart Chilton says to Chris, I went into my superior's office, I guess that would be Hank Paulson, and said they need to be prosecuted. They, in fact, didn't honor their word. They haven't cleaned up their short position. They've increased it. And he says to Chris, and I was told, back down, Bart, it's a political decision. Now, I'm not saying there's a coincidence to the fact he died about 10 days later, but he did. The point is that the head of the CFTC, which is like the head of the SEC for commodities, came out and said, verbalized, a lot of the things that we've been talking about, and guys like Chris and his efforts and all the people, Bix, yourself, Ted, David, all of these people, they're all good people, and I know every one of them and knew Ted, and none of them did this for any other reason but that they care. I don't know if anyone cares as much as Chris. He wears it on his sleeve, but we all care, and it's nice to know that everything we believed and put our name in front of the public has at least turned out to benefit those that decided to see things at least in a little bit of the way that we did too.
Yeah, that's true. I could even throw Chris Dwayne into that bucket, who dedicated his entire life to silver to the point where it caused family issues. So God bless him. He's right. And nobody who took our advice over the years is underwater at this point. I mean, almost nobody, unless you bought at above 80 like I did recently. But I don't care. Again, they're not going to stop printing. And so let's talk about demand. I'll show you this. Oh, you know what? Before I read this, let me come back to you. Let me just say, regarding people in the space, Vic Swear, friend of mine for a very, very long time, one of the first interviews I ever did, certainly one of the first I ever did about silver. You, Chase Turner over at SD Bullion, the CEO, really, really stand-up guys. Everybody that I know in this space is a stand-up guy. And Chase sent me a text this morning. The CEO of SD Bullion sent this. He's talking about the Orlando Coin Show, and here's the quote. He says, "I've never seen anything like this in 20 plus years I've been going to coin shows. It is a line so long it looks like the Minneapolis airport during peak travel season." I mean, I thought it was an airport when I first saw it. So what do you think is going on? Well, you would know better than most. What's going on with actual demand?
Rick Rule is a guy that has made famous a statement saying that from Joe and Jane six-pack to the Harvard Endowment Fund. Funny fact, the Harvard Endowment Fund just bought a couple $100 million of metal. But he would say the allocation of gold and silver, physical and equities amongst the entire matrix from Joe and Jane to the Harvard Endowment Fund is less than 0.5%. And forever, I would agree. The people that we've been talking to represent the pimple on the elephant's rear end. And all of a sudden, that pimple has grown into a much larger boil to the point that people are beginning to wake up, but it doesn't take much recognition to create these kinds of lines. And yeah, he's right. The demand is picking up, albeit still, nowhere near what we saw, for example, during Silver Squeeze, where the public really jumped in. And for the people who are jumping in late, who might be watching this show and have done so because of the tremendous rise in gold and silver that's impossible to ignore unless all you do is watch the mainstream. It's crazy. Silver's up 130, 40%. And you get articles like in Reuters saying silver, the devil's metal. Yeah. But you don't get much in the way of anything positive. And the S&P 500 up 16, 17% last year in the midst of the greatest tech boom in history next to the internet with AI. And it's 1/7 of what silver did this year and about 1/4 or 1/5 of what gold did, and not a word about it. So that's fine. That's all good. But, the point is that people are beginning to wake up. And if you are late to this, what I would say is don't make the same mistake many of the folks made during Silver Squeeze. You do not buy gold and silver to become wealthy. You buy it because it is wealth. And if you own enough, sure, you'll be wealthy. But it's been, you go back to biblical times, gold and silver were mentioned over 700 times cumulatively for almost 6,000 years. And here we are at the end of that 6,000-year run, and we see the most well-informed traders in the world and well-funded. But I focus on well-informed, the central banks, the commercial banks, the sovereign wealth funds, and now the traders in New York that are taking massive delivery of this stuff. That speaks volumes of it. So don't buy it to become wealthy. Buy it because it is an asset that allows you to sidestep the monetary and fiscal irresponsibility that is increasing. Hold it as wealth. Be glad you own it. If you need it, not just for the sky falling and that emergency that everyone thinks you hold it for, but an opportunity. Maybe after the dust settles, there's blue chip stocks selling at single-digit price to earnings ratios, paying a 7% dividend. Or maybe there's that cabin up on the lake you've always wanted, or whatever it is. It's for opportunities as well. And if not, you leave it for your kids, knowing that in the year 3000, when your great-great-grandkids are using the metal you passed down, that it will still be value long after the bills in our wallet are hanging from a frame in the Smithsonian as an example of what was.
Yeah.
You buy it because it's wealth. And I would simply say that it is expanding, and it's becoming very hard to get stuff, just like it is on the exchanges up top. But when you see the chief investment officer of Morgan Stanley say 20% of your assets in gold, and Michael Hartnett says no 25, if just a fraction of those people come into the retail market, SD Bullion and Miles Franklin and JM and APMEX and Money Metals, all great companies, they'll be out of product. And that's how fast it will happen. So no, it's not too late. And don't buy it to become wealthy, buy it because it is wealth, and it will all work out in the end.
Yeah. We'll talk a little bit about Asian Guy, a new smelting plant coming to the United States. That's only about 30 years overdue. And we'll talk about the actual real world value of silver. Before I show that and talk about that, the 4.7 trillion dollar market cap of silver. It's so phony baloney. It brings us back to the cup and handle and 95, $96 that you mentioned. I just think it's all such phony baloney. But you know who really got this thing right publicly? Back in like April or March with a tweet? Billionaire David Bateman, who said he bought 12.6 million ounces of physical silver and a boatload of platinum. That billionaire just became a whole lot more billionaire. I mean, that guy's up, he's up triple, I think, on that investment since like March. So he got it right. I think smart money is going physical. But here's what I wanted to share with you about that cup and handle, $96, $100. It just seems so low to me when you consider we see these charts all the time on Twitter. The other day, silver had surpassed NVIDIA as the second most valuable asset on planet Earth behind gold. It's adjusted a little bit. We can talk about why that's happened. So back down at $77 silver, it's the number three most valuable asset in the world at $4.37 trillion. But, as I just can't stop saying over and over again, Andy, that's the derivatives paper silver included in that number. That's not the real world number of physical silver. So I just think $77 an ounce in today's USD is just, I think that's absurdly low. Am I being hyperbolic?
No, silver's never been allowed to find real price. It has never been allowed to find its real value. The price discovery has been dead in the metals market forever due to central bank and commercial bank naked suppression to really, I guess, support the illusion of Western central bank dominance in the dollar. That's Gibson's paradox. If you maintain low interest rates, you got to kill the canary in the mine shaft. That's gold, because it's the inverse relationship between real interest rates and gold. And I really do believe that the only reason that eight Western banks would control the largest concentrated short position in any commodity ever traded on COMEX in silver for years upon years is to maintain strength in the military-industrial complex, to maintain a stranglehold on the world through strong military. These things are breaking for one reason, and that is that now there are countries in the global south that started the ball rolling, the BRICS, who are coordinated, motivated, sophisticated, and wealthy, and they stand for delivery. It doesn't matter what they do with margin. It doesn't matter how they suppress the price. They will use it against us and stand for delivery. And that is the most important thing, is that no one ever did that. Never. And maybe 1% of contracts stood for delivery. Now we're seeing incredibly large deliveries. In the month of December alone, it was the largest December delivery month ever in the history of the COMEX, with almost 63 million ounces. It was 62,875 or something like that, 62,875,000 ounces, or almost 12,600 contracts delivered in December. All-time high. Who's doing that? A mint box of Silver Eagles is 500 ounces. It's 42 pounds. What do you think 63 million ounces weighs? Who's doing it? Where's it coming from? Why are they doing it? And so these things, to me, speak volumes. Because the people at this level, they don't do this just for the hell of it. Speaks volumes of where we're already going. And no, we're not too late. This proves it.
Yeah. I just want to read this from Bullion Star. I've heard of Bullion Star. I think we posted from Bullion Star. Do you find this to be a reputable?
Yes. Is it Jan Nieuwenhuis, or who is it?
No, I think it is Jan. No, I think you've got that right. I'm familiar with these guys, and they just say silver demand is in absolute overdrive. Sales have exploded from a 50-50 split on Monday to silver now outselling gold 2.7 to 1. I'm a little surprised it's not even higher than that. At the bottom, they say current silver dynamics prove that the price is irrelevant if you can't take delivery. Physical ownership is no longer a choice, it's a necessity, which brings us to the much maligned Asian guy. Why don't I just play this and then we'll get your thoughts on truth versus falsity,
Sure.
friend versus foe. I kind of like Asian guy because I think he's 80-90% truth, maybe more. We'll get Andy's thoughts on that after this. Listen, guys.
Yes, the stock market is hitting record highs. Yes, capital is flowing into technology stocks. Yes, Nvidia and Microsoft and the rest of the so-called Magnificent Seven are soaring. But do you know what those companies need to build their products? They need silver. They need copper. They need the very metals that are supposedly out of favor. Every AI server requires massive amounts of copper wiring. Every data center requires silver for its connections and contacts. Every solar panel that powers these facilities requires silver paste. The technology revolution is not a replacement for metals. It is a massive new source of demand for metals. The market is creating a paradox that cannot sustain itself. It is bidding up the prices of technology companies while simultaneously bidding down the prices of the raw materials those companies need to exist.
I'll pause it there. That's actually not queued up to the right spot. He talked about CME margin hikes. Again, the paper games that are being played to get folks to panic and sell their positions on COMEX futures. It's not going to work because China is securing physical metal at a pace that is, I think, scaring the hell out of the U.S. government. Therefore, the Pentagon has announced, or the U.S. government has announced, a new smelting plant investment of some $2 billion with a $7 billion total cost, with the Pentagon, I think, owning some 40%. But nothing I heard there from Asian Guy is anything less than common sense. And, regarding the Silver Slam stories you have been seeing, I saw one the other day that I thought was hilarious, Andy. It was something about the AI bubble or the silver bubble. And they pointed the finger at silver as being the bubble. And I thought, well, isn't that interesting? How are you going to build all these AI data centers without physical silver? So,
Well, I don't if you ever watched like those montages where you'll see every single network from Fox to CBS, NBC, ABC, CNBC, and they all say the same 14 words. It's crazy. There's a narrative that is being boiled down from the top. They're all owned by four companies. They're telling us what they want us to hear. It's really very sad to hear that. We can talk about the margin increases if you want, or continue with this, and I'll reserve comment till after.
no, please, because he talked about the, I don't have it queued up properly, but he talked about the CME continuing to raise margin requirements a lot like they did back in 2011, but it's not working as well this time, is it?
Right. So in 2011, they raised the margins and it broke the market because it didn't have the same fundamentals behind it. We weren't seeing the deliveries. It's the deliveries that's breaking, not the margins. So I'll give you an analogy. I had lunch at an owner of a Major League Baseball team. He invited me to his house here in Florida a couple weeks ago. He lives down the street from Mark Wahlberg and across the street from Alicia Keys. And these houses, I've never seen anything like them. They're 30, 40, $50 million. The guy has two other houses as well. One in up in the what's it called, upstate New York, in what are they called, the like Montauk area up there. I forgot the name of it, but anyways, the ritzy place up in New York where everyone goes to vacation, and one somewhere else. His third house, and this house is insane. Do you think he cares what mortgage rates are? Of course not. Nor do the people who are standing for delivery. And, just the first 6 days of January, in the January contract, just the first 6 days, we've already seen an insane amount. I already told you that 64 million ounces stood for delivery in December. In the first 6 days, we've seen 31,605,000 ounces stand for delivery in off of COMEX. So it's 100 million ounces in the last month and a week, right, have stood for delivery. These people don't care about margin, but who does care about margin are all the traders who might be fairly well heeled, but they're playing in a sandbox with the biggest of the big. And so they've raised margins twice in the last 3 weeks. The last one was done the day after Christmas. On Christmas Day, you would have needed about $21,000 in your margin account to control one 5,000-ounce contract. So that means your leverage, 21,000 is controlling over 300,000 in silver, is pretty strong. So you get a trader, maybe he's got a few $1 million or 10 million bucks, and he's got, $1 million in his margin account. So he buys 20 contracts and uses margin because he's going to take advantage of this exponential rise in silver. So then the day after Christmas, they say, well, we're raising margin by 30%. So you need to put another $7,000 in on every one of those contracts, or we're going to liquidate you. So maybe this trader has to sell 10 contracts. The selling pushes the price down along with the increase in margin, begets more selling, and you get all these players on margin who get margin called or have to sell in order to meet the margin, which just then drops the price down, which is perfect for the people who in 6 days took possession of all of that silver, of the 30-some million ounces of silver at subsidized prices. So in other words, it shakes the bushes of the traders who shouldn't be playing this game easily for the banks and the funds and the sovereign entities that want to pickpocket. But that's why it's not working, because there are hands right there saying, great, we'll stand for delivery. There's a $5 an ounce spread between New York and Shanghai right now. So the traders are, again, incentivized to buy paper in New York, deliver physical in Shanghai, and make a $5 arbitrage, killing it. But that metal ain't ever coming back.
Yeah.
So what's different now is you have massive entities, including the U.S. government, saying it's a critical mineral. Are they some of the buyers of all of this gold and silver? I would say they probably are, using the Exchange Stabilization Fund to keep quiet. Point of it is that back in 11, you had speculation and you didn't have the fundamentals, nation states and sovereign wealth funds, and now the U.S. government, the European Union, and China all trying to get the same stuff. You knock it down, you're playing right into the hands of those that are willing to buy the physical and stand for delivery.
Well, that brings us to David Jensen, tying the whole thing together here. Now, David has been on the show so many times, but he's not a big fan of Asian guy. And I totally get it, because I think David and you, so many people do really the best work in the space. Asian guy is obviously sort of an AI newcomer. And I guess I'd ask you, Asian guy, friend or foe? What do you think? I think
he's a friend. I think I do, because there are some things he said that are flat out wrong. I'll give you an example. He said that the dealers had to issue a Form 8300 on every order over $10,000. Not true. If you were to take your family to Nordstrom's and bought $11,000 worth of clothes, you're buying everyone a whole new year-long wardrobe. Go crazy. And you spend 11 grand in cash. The cashier will bring the manager out and they'll issue a Form 8300. You go to Golf Galaxy after to buy everyone all new golf clubs and every full attire, and you pay $10,500. The minute you cross 10,000, that manager will give you a Form 8300. When you buy gold from us, if you pay with $20 bills, you'll get a Form 8300 if you spend over 10 grand. You send me a wire for $300 million, nothing. There is no. So he was wrong about that. He listed an executive order that was supposedly out there and listed the number, talking about the ability for the government to confiscate. You plug in that number, and it's an enhanced education bill. It doesn't exist. And if you search the National Register, you'll see none of that verbiage. However, much of what he has said is very, very solid, talking about the BRICS, talking about the banks. The one thing I don't like, he's talking about these documents that JP Morgan and that Morgan Stanley have issued from inside sources. We never see the document. We never see who are these sources. We never have any validation. And while much of what he says, maybe 70-80%, I think is solid, I find myself listening to him and having to fact check everything, and much of it's hard to fact check. So is it someone on the inside, maybe in Asia, said, the Americans do not get it? Yeah, they're the guys in the social media like us who get it, but we are speaking to the minority. I have never seen ever, and he does it through about 20 channels that he made, or 30 channels, and 2 or 3 videos a day. I've never seen anything like it. And it is catching fire. Does it catch fire to the mainstream, to expand? Maybe it will. But by the majority of the information being spot on, even though some of it's way off, I still think it's almost like someone has found a way, because he's quoted Bill Holter. He said things that I say. He got into a fight with the economic ninja because the ninja said he's full of crap, and the guy said, well, ninja's full of crap. It's like an aggregator, listening to everything that is being said across the platform and then taking it, boiling it down. I'll give you an example. Mike Adams is a buddy of mine. Do you know Mike?
Yeah, very well. He's a good guy.
Amazing dude. So he's created a new AI platform and a new platform that builds books. So I do an interview with him the other day and he says, I'm going to send you the book. I'm like, what book? He says, the book of our interview. And within a minute, when we're done, it's like a 200-page book comes to me with charts and graphs supporting everything we just talked about for 45 minutes. Like that. He's done like 5,000 books in just a few weeks in this new platform. It allows the aggregation of information and supporting material to just bloom. It's incredible. Check out his website, The Health Ranger. It's incredible. But the point is, it's almost like this person or people, because it seems very coordinated. It's not something one guy could do 24/7. He's got a team that is aggregating the information, boiling it down, running it through AI, getting supporting material. Not all of it's right, just like not everything is right on ChatGPT, but a large portion of it is. I think he's a friend. He's trying to wake people up, and God bless him for doing it, even if not all of it is right. It just tells you no matter what platform of AI you are using, it's not the gospel any more than anything you read on the internet is gospel. Do your work, do your due diligence, check it out, fact check it. A lot of it is, some of it's not. Be careful.
Yeah, be careful. And let's put friend in quotes, because when I said friend or foe, you knew exactly where I was going. And I do think the information is friendly for those who want to gain knowledge about this space. But it feels a little Sun Tzu Art of War to me. It feels very nation state backed to the degree that it is so orchestrated and so instantaneous with so many different channels that it makes me wonder. And I have heard videos where Asian guy says he was born in America and his dad worked on Wall Street. So I don't know what to believe, but it feels a little Sun Tzu Art of War. And we know there's monetary warfare happening right now as metal moves from west to east. And we know what the Opium Wars were all about. Silver, stealing silver from China. This feels like the reverse. The Opium Wars now turned against the United States.
Well, I will tell you that the Sun Tzu book, Art of War, which was written in the 5th century BC, probably was the most profound book I've ever used or read ever in my career. And this is a book that its teachings are taught in most major business schools on corporate hierarchy. It's taught in most law schools in formulating arguments. Bill Belichick used to read it all the time in formulating game strategy. It's mandatory reading at West Point and CIA, and it's something that teaches you how to beat your opponent without throwing a punch. So I will say that's very interesting to look through it at that lens. It is the art of misdirection. And you think about any game you've ever played. In football, they have a play called the misdirection where everyone goes this way, but that one little tight end is sitting out here, no one's looking at him. In baseball, it's the squeeze bunt. You bump it. Everything is misdirection. Even in chess, you flank the rook so the queen can come around this way. It's misdirection. It could be. It might be. I hope it's not. But yeah, when you talk about that kind of a lens to it, maybe it truly is. Let's hope not. But, I think you have to be cynical about everything nowadays. And that's maybe the kind of lesson that people should take away from anything that they hear in this industry is do your own due diligence and check it out. I hope it's not setting a trap for a lot of us, but...
Well, no, I don't mean that it's a trap for us. It's a trap for the West by creating so much demand, because Asian guy has done a favor for the space to the degree that he's so propagated by YouTube. Maybe that should tell us something too, by the way. But he's so propagated by YouTube that anybody that types in silver is going to get that information, and much of it is factual. And if you listen long enough, you're like, God, I should probably buy some physical silver. That's all I'm saying.
Maybe the largest holders of silver in the world are have a vested interest in doing that. So whatever it is, I've never seen anything catch fire like this, Sean. Never in all my years.
Yeah, me either. Okay, so just wanted to share this from David Jensen. Now, the name of this article here is Suddenly a COMEX Silver Delivery Rush on Limited Vault Inventory. David is always happy for folks to share his information, but I do want to give him credit. Yep, we'll take the medal, thanks. So he recounts what's happening here with the COMEX, the people on the COMEX standing for delivery. And I'll just skip down to here. February silver future contracts also increased by 1,564 contracts, ending the day with an open interest of 3,423 contracts. Now, each one of those contracts is what, Andy? 5,000 ounces?
5,000 ounces.
Okay.
Yes.
Buyers appear to be stepping into the CME COMEX futures market and using it as a physical delivery market for immediate and near immediate delivery, not as a hedging market for which it was allegedly designed. So any way you cut it, Asian guy, China, it doesn't matter. What's happening here is happening in real time. And I guess I'd ask you this: who's in worse shape right now, the LBMA or the COMEX, or both? Are both the vaults sort of equally being gutted?
I've had David on my show. I'm a big follower of him, and when it comes to the COMEX, there are very few who get it the way, or excuse me, the LBMA, there are very few who get it the way he does, and kudos to David as well. And what he has said, what you said right there for the immediate delivery is the interesting part, because as I said, in 6 days we saw 31,605,000 ounces of silver stand for delivery, and it normally happens right at the beginning of the cycle. He noticed something in November or December where 3 days in a row, it was a record for 3 straight days for late month immediate delivery contracts to be written. In other words, if you have all of this open interest leading up to the first day of delivery, you have a good idea of what you're looking at. But what he is saying is you get these massive traders who step in and buy it mid-month and do immediate delivery. It's not as easy to gauge it. I would argue the LBMA is in far worse position. David will tell you that they have 6 or 700 million ounces of silver in the LBMA, of which supposedly only about 140 million ounces are available. The rest supposedly belong to the ETFs like SLV. So of that 140 million ounce float, it's called, there is over, according to David, 2 billion ounces of paper contracts outstanding that could stand for delivery. This is called rehypothecation, where those 140 million ounces were sold so many times that there's 2 billion ounces that are being backed by 140 million. Now, what could possibly go wrong? So much to the point that the LBMA for most of 2025 was trying to tell us that a shortage of manpower and trucks has created a situation where instead of it being T+1 as it's supposed to be, T is trade day, so you, Sean, own a multinational jewelry manufacturing conglomerate, and you need those bars that you buy the contracts to make your jewelry. And they call you up and say, Sean, listen, I know you've just stood for delivery. T is today, plus 1 settlement. That's the +1. On the 3rd day, those bars should be in your account or heading your way. We're sorry. The Bank of England is very sorry that there is a 8-week delivery delay now because of a shortage of manpower and a shortage of trucks and manpower. That's like getting caught with your pants down. It's an acknowledgement that it's already broken. And so I think they're in more trouble than the COMEX is, but we're seeing drawdowns everywhere. There's an interesting take. You should interview a guy named Tom Luongo who has a very interesting take on all of this, basically saying that Trump is doing this specifically because of his belief of the European aristocrats being involved in election interference in the color revolution. So he told everyone it was tariffs to reshore the contracts. These banks all worked in a collusive manner for 50 years, selling back and forth warrants instead of the real metal. They would short in New York and go long in London to offset their book, but it was shorting in New York that drove the price down, not going long in London that changed anything. So by bringing the price down in New York and offsetting it with a long contract in London, they could drive the price down and go back and forth with warrants to make it look like it was a market with great volume, but capping the price. But now all of this metal has come back, supposedly because of tariffs. For a year now, I've been screaming it's reshoring, it's not tariffs. And the Economic Times comes out with a report 2 weeks ago saying that, now I'm not validating this, this is what the Economic Times says, that JP Morgan has flipped, has covered a 200 million ounce short position. Now, this is different what the AI guy is saying. He said once he's long and once they're not. But the Economic Times says 200 million ounce short position covered along with the purchase of 21 million ounces of physical in 6 weeks And the majority, if not all of the 5 U.S. banks are net long, which would mean the shorts are the European banks. Now, AI guy adding to this says there's supposedly two memos that are circulating that are very private, one for Morgan Stanley and one for JP Morgan, that both are telling their institutional traders to leave all COMEX positions by January 31st. This is where we have to be careful about what AI guy is saying. He is saying there's an internal memo that was leaked where JP Morgan says by the 31st, if you're not out, you'll never get physical delivery. It would be cash settlement only. Exit all positions. The same thing Morgan Stanley said, exit all positions. Now, if this is true, and at the same time, Trump says it's a critical mineral out of nowhere after all this metal is flown in supposedly to cover the shorts because, well, the tariff threat, don't worry, we'll send it back like we always do. But now the U.S. banks are long, according to the Economic Times. The exposed banks are the European ones. Then Trump says it's critical. Then China says we're going to massively curtail exports. Do you see a problem that could happen? And what there's AI guys saying about this memo, does it mean that JP Morgan thinks and Morgan Stanley think that the COMEX is going to blow up, or that there will be a contagion, some sort of systemic event maybe on the LBMA that pulls down anyone who's connected to these banks? So get out now. You got to the 31st to close all futures positions in metals. Doesn't mean that they're not very bullish, because in that article, it said they've amassed 750 million ounces of physical silver, the largest position in the world. Here's where you get different information. Who's right, who's wrong? So I go on Adam Taggart and I say this publicly. And then you go and look for that article and you can't find it. They pulled it off the site. You go to ChatGPT or any AI site, Gronk, and ask them about this article, and it will say, yes, this is a real article. And then there'll be a link to it. You follow the link and it says this page has been removed. So I don't know what to believe anymore, other than to say there are a lot of things happening that are all, to me, focused on the biggest, most well-funded, well-informed money in the world is pulling metal in massive amounts off the exchange. And the amount that we see, Sean, is like 4 feet of snow in Death Valley in July. You're not going to see ski resorts opening up in Death Valley if that happens day one. It's an anomaly. Well, this is an anomaly, and it's been going on for 13 months since Trump won the election. No journalistic integrity at all across the mainstream to say, who's doing this? Who's bringing in billions every month, not just in silver, billions and billions every month in gold and in silver? That to me speaks more than anything else. But you start to put these clues together, what Luongo says, what JP Morgan and Morgan Stanley supposedly said, and all of the restrictions from China and the reclassifications from the European Union, who did it at the end of 23, and now the United States doing it, and a race to get supply that's been rehypothecated. I don't know. You see Samsung going directly to the Mexican mines. I've been reporting for 2 years now. My friend Sean Kuhn, the CEO of Dolly Varden, said, Andy, China's been going to Mexico and Peru for 2 years, buying gold and silver doré and concentrate in pre-refined stages long before it's even called gold and silver, paying double what the West will, shipping it back to China for refining to disintermediate the market. And now Samsung does it and it gets all the attention. But China's been ahead of them for 2 years. So there is a race, and it's accelerating, and it's becoming more visible. But if you look closely, it's been going on for a while. Why would the number 1 producer of gold in the world and the number 2 producer of silver in the world find it necessary to fly to Peru and Mexico and buy doré and concentrate when they're already producing that much, paying double what the West will, shipping it all the way back and refining it themselves? These are questions that, to me, if you just ask the question, you can almost imply the answer. So, this is just beginning, but it's not going to be easy in the month of January as we get rebalancing of the Bloomberg Commodity Index, the repositioning by law of these funds to get things in balance again, the January effect where funds are coming in, and then the buyers in Asia and here in the States are saying, we'll take whatever you guys want to drop down for us, thank you. It's going to be like as the Asian guy said, a heart rate
peaks and
monitor.
valleys. Yeah, no, okay, you hit on something I meant to ask you about. I'm so glad you brought that up. So Asian guy talking about, well, the rebalancing coming in the middle of the month could really injure the price of silver,
It
at least
starts
for a
today,
brief
by
time.
the way. I'm sorry
But
to
I don't.
interrupt you. Starts
No, but
today
how
for
does
the
that
next
even?
week.
How would that hurt the price of silver when everybody is underweight silver? I don't get it.
Because what happens is you look at the portfolios by law have to have a certain balance, and silver went up 150%. So it has an outweighted balance in all of these funds that have silver in them. So by law they have to like sell silver and maybe buy natural gas or whatever. So to put them back into a balance, it was like it's 9% now and they need to get it down to 3. Whatever it is, they have to rebalance their portfolios. But at the same time, you got all these people standing for delivery who will pull it back real quick. That's why they can't hold it down anymore. It is the delivery that is distorting their ability to suppress the paper price. It's Bernie Madoff exactly. You know, my wife was best friends with a gal in Minnesota when we lived there who unfortunately got taken by Bernie Madoff. And I remember they would always, take trips to Vegas all the time, big gamblers. They had a $2 million house that they had a huge mortgage on. What do they care? They were making $20,000, $30,000 in interest a month and getting a check from Bernie. But I remember meeting them for dinner at the then Palomino in downtown Minneapolis, and they walked in tears the same day that Bernie Madoff got busted because people said, give us the money. Well, you think about all of these deals when everyone says we want the real thing, the scam that is a Ponzi scheme is exposed. This is what has happened. And the Chinese and the BRICS nations noticed this years ago. And what is so hard for people to get is it's not instantly gratifying, like NVIDIA or Bitcoin making millions just like that. This has taken time, and people say, well, why wouldn't they just buy it all up? Because they would have cut their nose to spite their face. So instead, slow and methodical, draining everywhere across the globe, most of which doesn't affect the price, buying doré, buying concentrate, doing all of these things. The Belt Road, all of these countries, 150 plus, are massively resource rich but underdeveloped. Strike deals with them all. We get a piece of your resources, but we're going to build roads, bridges, maritime channels, oil refineries, gold and silver mines, and the ability to pull it out of the ground and bring it to market and build up and industrialize your country for it. We want a piece. They see the big picture, have for a long time, and that's why people say they play 3D chess.
That's right.
We play checkers.
That's right. Well, they look decades down the road, and what happens in our country, quarter by quarter by quarter of short-term thinking, it's madness. And by the way, I did listen to that interview between you and Adam Taggart, and one of my last question of this interview today will be regarding that. But are you surprised? Well, and first of all, let me just say, regarding the rebalancing and any of that nonsense that happens, I think China is so well aware of the financial fraud that is part of our country. I mean, case in point, Minnesota is being looted by Governor Walz and the Somali community. There's a much bigger story at play there, but we're seeing it in Ohio, Pennsylvania, all these blue states. I'm sure it's happening in red states. It's an actual looting happening in real time with $38.7 trillion in debt. And silver is a finite, tangible measure of real wealth. I mean, I'm just saying, get out of your paper and get silver in physical form. In my opinion, it makes sense because I don't think any of us realize what $38.7 trillion in malfeasance really means.
Well,
Right?
a trillion seconds ago was 31,688 years ago, and that doesn't even take into account the 200 trillion in unfunded liabilities in Medicare, Medicaid, Social Security, government military pensions. Yeah, mathematically we're broke. And then you get, what's his name, the hedge fund guy, Ray Dalio comes out and gives an interview, says that 60% of America has a literacy rate of the 6th grade or under.
I know.
And we're broke, we're insolvent, we're uneducated. It's a problem. And they do see it. And what's happened in my home state, where I spent 50 years of my life, is heartbreaking to see what's happening. And a lot of these people deserve to be put into prison. They really do. Hopefully they end up there.
Well, that's why there's a bit of a schism right now in the MAGA movement, is because it's like, okay, where are the domestic arrests? We don't need to go there today, but let me just wrap this up by saying, are you shocked? So when we know China plays the long game, as they always have, Sun Tzu's Art of War, I mean, they play the century game, not the quarter by quarter game. Are you surprised that it took the government this long to go, oh, you know what, we should probably fund a smelting plant with $2 billion and the Pentagon will retain 40% ownership of this thing? Like, if you and I knew the silver glut story and the paper silver story for the last 15 years, how are these guys so late to the game? It kind of blows my mind.
It really is better late than never. And by their very moves, you can see someone within the Trump administration woke him up. because since this has all started since November when he won the election, 3 months before he took office, and everything that they are doing, you should interview Judy Shelton. She says July 4th, 2026, he's going to back the back end of the bond market with gold, and he makes silver a critical mineral, and all this stuff is coming in. And he finally, we talk about how important it is to reshore manufacturing, which is part of my thesis. We can talk about that another day because it's a little longer. But it involves devaluing the dollar. And how do you devalue the dollar? You let gold go higher. It's the Genius Act that is going to do that in a big way, which goes into effect January 1, 2027. Tether buying all the gold. They already own $14 billion in gold, but that's for another day. But the point of it is that he is definitely realizing it, no question about it. And you look at the last administration, and all you need to do is Google the Cloward-Piven theory and read what that is and put it in context with the previous administration. You'll be like, my God, it was a polar opposite. So my feeling on President Trump is his policies are incredible, and they are America first. It's just the divisiveness in this country and the fact that he is a little brash. People aren't able on the other side of the aisle to realize that what he is doing is really defending this country. We cannot be reliant on the rest of the world to make all of our products. And you look at rare earths, which you need, but China refines over 90% of them. At one point in the last few years, almost 100%. And you look at their refining for silver. They refine 60 to 70% of all the doré that makes its way back into the West. So why not have a refinery here at home so that you can be in control of your own destiny? These are the things that he is doing, in my mind, that do not get enough attention and enough praise. And God bless him for doing it, because if not, our children and our grandchildren are in big trouble. And I think I give him credit for it, and I wish it would have happened sooner. But in this case, better late than never.
Okay. I appreciate the cup half full look at Trump on that, because I've been giving him a bit of a hard time over the Maduro thing, and I'm trying to get my arms around all of these geopolitical things. But it's clear that we've sort of entered a quiet World War III. Okay, shots haven't been fired yet, but I mean, now we're intercepting Venezuelan oil tankers and Russian subs are appearing. It's getting kind of scary. Final question, respectful of your time. We're about an hour deep. Last question. I listened to you in the interview with Adam Taggart. Adam said something similar to what I've been saying, but he noted junk silver, constitutional silver, as being what a shame to watch this stuff get melted down for solar panels. And I've been saying, as it pertains to, say, a 1995 Silver Eagle, the rarest, lowest mintage eagle, it's worth more than your standard silver eagle. How about pandas? How about kookaburras? I remember buying kookaburras when they only minted 100,000 of them a year. Then they upped it to 300,000. Koalas, too. Those are unique coins that can only be made once. 2003 kookaburras, they can never be made again. What a shame to watch these coins be melted down. I wonder if 50 years from now, those coins won't really be precious in terms of the historical value.
Yeah, so, and it is a shame that things like junk silver have been melted down, but that's actually a very interesting question that I think people should understand. And you're right, there are coins like the 96 Silver Eagle or some of these older coins that have rarity attached to them, and it's neat to do that. Oftentimes you can become what starts out as protection and trying to employ some fiscal responsibility of your own turns into a hobby and a collection and lots of cool things that can come out of it. But I think people should understand something quite interesting about the pre-65 silver. So companies like mine and SD Bullion would be shrewd and smart enough to see what was happening to the price of pre-65 silver, which, as an aside, during the pandemic, for 4 years, nothing performed better than pre-65 silver except the Silver Eagles. And we would have bought bags of junk silver back from the public in any quantity at between $9 and $11 over spot for 4 years. That was the highest I'd ever seen. But then we get to the other end. And during the AI craze, a lot of this was dumped. And so big companies like us and SD and others would have bought all they could because of what I'm about to tell you, whereas there's 5, 6, 7,000 small and mid-sized coin dealers around the country that don't have the outlets, perhaps, that us or SD does, and this stuff has been sitting on their shelves for weeks. So what do? They bring it to a refinery. And as the price of silver went higher and higher and higher, we saw junk silver melted down, and jewelry and candlesticks and flatware and doré, and all of this stuff got melted down. But here's where it gets interesting. For the last several months, we've been able to buy silver at under melt value, way under melt value, and sell it. I was selling it on Adam's show there for $1 behind spot. Now the prices have come up. How can I do that? How can I sell it for $1 behind spot? I'll tell you exactly how. So all of these coin shops and small dealers who didn't know what to do with it typically would send it into a refinery. They need to keep money moving, right? You know, we do a ton of volume. SD does a ton of volume. These things aren't as important, but for the coin shop, maybe they're not doing a ton of volume and the price is going up, insurance, security, all that stuff. So they got to move it. So they send it to a refiner. Now, if I have 3 million ounces of silver in my warehouse, what you had said earlier about hedging and the COMEX, what it was originally designed for, if I have 3,000 ounces of silver in my or 3 million ounces of silver in my warehouse, and the price falls by $10, I just lost, what, $30 million? So instead, I will sell short on COMEX the exact same amount. So one goes down, one goes up the exact same amount. With my inventory, it's a covered hedge. It allows me to maintain market neutrality, right? But because of the volume we're doing, we have the ability to maintain that hedge, and as we sell it, we unwind it and do all this stuff, okay? So, and we're selling lots of the pre-65 silver. Now here's why it was so cheap. The refineries, on the other hand, imagine you're one of these refineries and you take in $50 million worth of silver in all different forms, and you need to make bars and rounds, right? So the first process, if you've ever watched how they break apart flatware, it's a massive process, right? In a knife, for example, the knife is made of stainless steel. The handle is made of plaster with a thin wrapping of sterling silver on it. So it's a very laborious process of breaking it apart, pulling out the sterling, throwing all the scraps away, throwing it in the box. All of this, including the stuff that needs to be refined for purity, it takes time to refine it into shot. Shot are like little BBs or ball bearings, pure silver. Then you need to then make it into a bar or a round and package it accordingly. And doing all of these things, it can take several weeks. So they got all this inventory in that they have to hedge, right? They have to hedge that position, or if they paid 50 million bucks from the public and the price falls, they go out of business. So they hedge it. Problem is, silver's been moving up so fast, they're getting margin called on, and they haven't been able to get the cash out of the production yet. So they stopped taking new orders for quite some time. And then the big houses, the big market makers in this industry, the primary distributors said, fine, well then we'll buy it at $2 back a spot from you. So I was able to buy as much as I went out onto my line of credit, and I told my operations, buy every damn thing you can find in junk silver, buy it all. If you're getting it under spot, what do we have to lose? So for several weeks, I was offering it to Adam's client base at $1 back a spot. Now the premiums are rising. But the only reason that was allowed to happen was because the refiners couldn't hedge their production without getting margin called, and the market moving so fast would have put them out of business. So for those who were fortunate enough to get it at those really, really cheap prices, now it's barely a buck over, but you know, it was 9, 10, 11, 12, 13 over spot for 4 years. To me, the most undervalued asset or form of silver, period, that I have ever seen is pre-65 silver. It's the best value I have seen in 35 years, and I'll stand behind that.
So you were able to sell junk silver $1 below spot?
Yeah, if you go to my podcast with Adam over the last 2 months, you'll see that I was offering it 100% at a buck under spot to all of his listeners. And, you know, I would rather give that good deal than make an extra buck or two, because the volume that we did allowed me to buy up literally millions upon millions upon millions of dollars worth of the stuff that they were selling to me at $2 under. So it was easy to do. And now all of a sudden the premiums are starting to rise.
Yeah. Yeah, that's just unbelievable. All right, well, let me show the website one more time. All right, here it is, guys, milesfranklin.com. I'll leave a link to SD Bullion below, too. Miles Franklin, people can reach out to you. What's the best way to do it, Andy?
The best way is to send us an email at info@milesfranklin.com. Whether you want to receive our price list, which offers prices that are much more competitive because we only allow purchasing up to $10,000. SD Bullion has a much more robust website than we do, and I have a very peculiar set of very strong reasons why I do not do what they do, and it's more convenient working with them. I understand that. But we won't be undersold, and it's just that we have relationships with some very large entities whereby we don't post our larger volume discounts. They can send us an email at info@milesfranklin.com. They can send us any questions with no obligation to purchase. You can just ask for the price list. info@milesfranklin.com, and our YouTube channel where Michelle and I, my co-host Michelle McCory, are doing a couple videos a week is Miles Franklin Media at YouTube.
Excellent.
On YouTube, Miles Franklin Media.
Okay, Miles Franklin Media. All right, perfect. I'll try to remember to leave that linked below too. Sorry, I know you got to go. Final question. At what point, this is a question I have for Chase, and I haven't asked it yet because he hasn't been on recently, but at what point do you guys, as precious metals dealers in the United States, stop pricing silver anywhere near what COMEX pricing is and just go with the China price? I don't know.
I think so the way that we price things, and I think Chase would say the same thing, is you don't price it based as much upon the price today as much as it is what is the replacement cost tomorrow.
Yeah.
So if you sell everything that you have, like I was selling junk silver to buck under spot, then I see that all of the supply out there is now to replenish is $1 more. Well, you have to then price it higher because you're not going to be able to replenish it at the same price. It really depends upon when the market makes that collective decision. And I think that'll probably happen. I've said for a long time that the Western price mechanism has been a privilege that we disrespected horrendously. And the countries like in Asia, they understand it. So if the real price is $5 higher in Shanghai, isn't that the real price ultimately?
Yes.
And ultimately, an exchange like the Shanghai Metals Exchange or the exchange in Dubai or St. Petersburg or Moscow or the coming BRICS exchange, they will be cash and carry, and it will be that is the real price. And I'll tell you one last thing which will underscore that. I've talked a lot about the BRICS for years, and they're building the BRICS grain exchange, and the grain exchange is being run by this one gentleman who was interviewed not too long ago, and he said, we produce and consume more grain than they do in the West, yet we don't have the ability to control price. However, with the development of the new BRICS grain exchange, that will change. In other words, acknowledging the fact that real demand for physical grain will be able to overwhelm the paper version of what that price is. Well, the same thing will be true with their metals exchanges. And the Shanghai Metals Exchange is expanding through multi-jurisdictional vaults that they're building all around the world throughout the Belt Road Initiative. You are going to see a whole series of vaults that will be controlled by the Global South that will allow settlement of trade and currency imbalance in gold. And whether you're talking the unit or just the fact that the digital yuan is now convertible into gold immediately without being converted back into dollars first, incentivizing trade in other currencies over other platforms that sidestep SWIFT interference. And you're going to see that happen. And that's when you get real price discovery. They're using the illusion of the Western price against us. It's jiu-jitsu. Use your opponent's leverage against them. And once there's no one stupid enough to give stuff away at those prices, like us dealers or like those on COMEX, that's when the things change very quickly. And the disrespect we've had of having the privilege of controlling the world's commodity prices forever, like that, moves eastward. And ultimately, that is the fate, I believe, that is already baked into the cake.
Yeah. I think you're right. Sorry we went long today. I really appreciate your time.
No, man, I love being on the show with you. You're someone I've followed for a very long time. You're the class of the industry.
No, please.
And,
you are.
No,
you're always so darn nice.
Me on.
You're too nice.
No, man, I mean it. And I have nothing but high respect for SD Bullion. We're all on the same team. And, thanks for having me. And maybe someday we can have us both on together and we can really talk an inside look. But in the meantime, happy, healthy New Year to you, to all your listeners. Thanks for having me on, Sean, and I promise you I'll look forward to picking up where we left off somewhere down the road.
Okay. Thank you, and have a wonderful
God
weekend.
bless.
We appreciate you. All right, guys, there he goes, Andy Schectman, one of the classiest acts in the business. The links are below. Friends, I'll remind you every single day, check us out to get the real news 24/7 at sgtreport.com. And until next time, God bless you and yours. Bye-bye.
I mean, starting with Rockefeller, all of this health care, which is a guise of trying to help people, has been for money. And it's now spiraled out of control to the point where we're injecting the entire planet's population with a vaccine that we know did more harm than good.